I can honestly say that this October was probably one of the most least active months in terms of my portfolio, and I think it's really reflecting a time right now in my investing journey where I think I'm done with all the reconstruction of my portfolio that I've been doing really for the last year and a half to 2 years now, and I think my portfolio is just perfect where it is sitting as it is. But of course, it can always get better here on the channel, and this month I think I made some creative moves and transactions in the portfolio, which I look forward to sharing with you guys every single month as I do. It's been really nice just kind of living my life, figuring it out, when coming home in my portfolio being up 150, 200 bucks every day without having to do anything. It's a really nice feeling, and it's a feeling that I'm looking forward to getting on a larger scale in the next 5 to 10 years. Also, today coincidentally happens to be election day, so today I'll be sharing my thoughts, how that will impact my investments. Spoiler, it doesn't really. Why I think a certain candidate could be better and a certain policy that I'm a bit concerned on. We're going to be discussing it tonight on the Cash Flow Kings live at about 9:20 p.m. Eastern, so be there, but I'll also be doing a segment at the end of today's video. But wait, it's November now.
Here comes Santa Claus, right down Santa Claus.
Please, it's too much winning.
Hello, I like money.
Alright, currently the portfolio is sitting at a value of $30,821.25. Now, it probably peaked around $31,500 this month, but since then it has come down a little bit, and this is where it's been averaging as of recently. This is up about $200 from last month. Currently, when it comes to portfolio allocation, 72% of my companies right now are U.S. large cap stocks, 15% are U.S. small cap stocks, 11% of my portfolio is in quote-unquote fixed income. I'm going to get to that, trust me. And then my only international play right now is High Tide, which is up a lot, about 40% from when I bought in. And unfortunately, it's one of the smallest positions in the portfolio right now, but still I'm looking at. Currently, my portfolio has a 15.54% annual rate of return. That currently is underperforming the S&P 500, but historically you get a 10 to 12% return with the S&P 500, so it's outperforming that metric. But still, the S&P's had a crazy run. It's kind of like comparing my basketball skills to like somebody like Michael Jordan in his prime. It just doesn't make sense. But over a longer term time horizon, this is going to be a very important metric to keep my eye on. Now, something that I have been going towards more recently is a heavier index approach to investing. I want to have a 30% allocation of my net worth / portfolio into SHG and then around 10% in SHD. Trust me, we're going to talk about that allocation in this video. This was probably the least active month in terms of dividends, but still we did get a respectable amount of dividend income. To start the month off, Vici Properties pays this month. They paid their last dividend of 2024. To me, they gave $32.31. That's a very respectable dividend. Vici is one of the highest payers in my portfolio. I loaded up on them when they're in their $27 to $28 range. If you guys were watching my portfolio updates back in like March, February, April, you would know that I was absolutely loading up on an interest rate recovery play. Vici's went back down to like $31, $32, but still their business is kicking it. I'm not worried about them whatsoever. I'd be happy to add more around the 28 to 27 range. Lastly, I got $10.74 from Altria. Now that Altria position has been decreased recently. I'll be discussing that in my buys and sell segment next. But still a nice dividend of $10.74. That was not reinvested. Something that I did this month was I chose the certain positions that I want to reinvest and I don't want to reinvest. I'll talk about that in a full portfolio reveal I hope to do before the end of the year. But yeah, that's something that I've definitely made a change this month. And then 20 cents in interest from Schwab, which isn't anything. And I'm going to discuss the interest because I got a really interesting move that I did this month. And this is my current dividend income since 2022, and it appears to finally be trending up, which is a nice sight to see. And you're going to see those numbers be a lot more consistent for the last few months because I've kind of solidified the positions that I'm going to be holding in the portfolio. Those months and those payouts are just going to be more consistent and grow up from here. Now, something that I did at the beginning of this month was put all of my cash, that's just about 10% of the portfolio, into SGov. Now, SGov will just allow me to basically earn interest risk-free. I get about a 5% yield right now, thankfully, because interest rates are high. There's basically no risk here whatsoever unless we're going into World War III. I was doing a live earlier this month with Capital Mindset and Dan Weston, and the idea of not having my money in SGov kind of hit me. See, I'm not traditionally someone that carries a ton of cash, and I've only had about this like $3,000 in cash saved up for stocks, saved up in the portfolio for like the last 3 months, and it kind of hit me like, hey, I could be earning a lot of interest here, and it was a lot more than I thought. I added roughly $300 to my entire income when it comes to interest and dividends from $600 to $900. That's absolutely insane. I didn't realize that. So, if you guys don't have your money in SGov or something else that is earning higher interest than what Schwab is paying you, do that right now. This is your reminder. I'm earning a lot more money on that. And I've also found with putting my money into SGov, I am a lot more picky when it comes to choosing my stocks. I'm a lot less trigger happy. Trust me, this month I still added, I DCA'd, but I'm a lot less trigger happy than I was maybe in the past of just having that money sit in traditional cash with Schwab. But honestly, this month was very inactive when it came to transactions. You'll see a lot of the same thing. There's just not a whole lot of deals right now, and that's something we've been discussing on the Cash Flow Kings. Like, there's just not a ton of deals right now. Nothing crazy appealing where maybe in August and June and over the summer there was stuff. Now it's just kind of like you're waiting for that eventual correction or dip. But I would be a fake man's investor if I didn't invest for the entire month and just wanted to time the market. So of course I had to continue improving my portfolio and averaging it. To start the month off, I put $40 in Amazon, $182. Really like Amazon around this level. Hopefully you can get back down there. It got up to like 200, but then it's selling back off again. Hopefully I can get more at that price. Then I sold one share of Kroger for the start of the Kroger trim era in the portfolio for a 30% gain, and I just put that money into Amazon at $181. You ask yourself honestly, what is going to have a better total return, Kroger or Amazon over the long term? It's the no-brainer. So I just figured it makes a lot of sense. Then I bought 2 shares of SHG after the split. I was kind of waiting. The reason I really do enjoy the split, it's just much easier for me to DCA. I don't have to drop like $100 if I want to DCA into SHG or SHD. It's really nice. I added 1 share of SHD as well, $28.49. I've been continuing just to add to both those ETFs and build those up. 25 to 30% allocation I said that I wanted. Currently, they're both around like 10 and 10, which is fine, but I want to continue adding to SHG. That's the one I have a lot of priority adding to right now, but it's hard to when it's at all-time highs, so I've just been averaging in. Then I completely sold out of my small position of S&P Global, a really good business, but I just didn't own enough where it made enough sense. Like, if you do the math in your head, if S&P Global doubled from here, I would still only have a share and a half of it, or $750. It wouldn't make up a whole lot in the portfolio. Trading at a really rich valuation right now, I'd be happy to buy back into this company, but at the right price. It just didn't make sense for me to hold it. I have a lot of like holdings, or I did have at least a lot of holdings in the portfolio that were really good businesses, but they're small holdings. They're 1 to 2%. It just didn't make sense for me to kind of hold on to them at this point. So I'm putting my ideas into bigger basket and putting my money where my mouth is. Of course, I'm going to index that money. So I bought 4 shares of SHG at $26.63, 2 shares of SHD at $28.63. Added 1 more share of SHD and 2 more shares of SHG then. I put $30 in Amazon the other day at $186. I recently sold 2 shares of Altria at a 24% gain after they were up 8% after earnings. The thing with Altria is it's kind of the total return argument. Am I going to get a better return with SHG or Altria? The answer is obvious. I think you'd have to time Altria very well to get a good performance, and I timed it pretty well, and I got some decent returns already. So I'm going to take advantage of that. Also, a big issue with Altria is the smoking rates have obviously been declining. I don't think that's a giant issue for them going forward, but still, there's risk there. Compared to like a thing like SHG, I just feel better having my money compound in there. You ask yourself honestly, what's going to have a better return, SHG or Altria? The answer is obvious for my time frame. And then I just put that money into SHG at $26. So it was a solid month for me. I just continued adding and averaging into SHG, SHD, and Amazon pretty much. Those are like the only companies I bought. A lot of people have also been asking me about Starbucks. They recently reported earnings, and it seems that they're kind of struggling right now. The market's giving them a premium valuation. Right now with my Starbucks, I'm holding on to it. I'm going to be honest, like, it's not good execution right now. It's not great performance. Brian Nickel is a giant part of my investment thesis going forward with this company. And you can't give him like 20 days or whatever that he has had as CEO to see good results. I'd give him a year or two. He's going to be a fantastic CEO. I like what he's doing, bringing back a good experience inside of the stores, a welcoming experience. I think that's kind of been gone with Starbucks. And hell, they're bringing back the condiment bar. Starbucks is going to $200. All right, now onto the topic of Trump and Kamala, who I think would be better for the stock market. Now, something that's interesting is that looking historically, we're due for a pretty big correction or recession. So the next president is most likely going to have to take some responsibility for that. I would be pretty shocked if there's not some sort of decent correction like there was maybe in 2022 or 2020. But when it comes to both presidents, if you look historically at performance, the presidency really doesn't have a crazy impact on businesses' cash flows and performance over the long term. Now, things that can be impacted by the presidency. Uh, Taxes on capital gains has been something that Kamala has been pushing, and that's a big concern for me personally. Nobody wants taxes on capital gains, and I understand that it's only for the ultra wealthy and wealthy people, but still, that's a very bad, especially unrealized capital gains. It's a very bad trend to be setting going forward, and that would worry me. Maybe they take that to more extreme levels in 10, 15 years where I could be impacted by that. I think this is also an interesting presidential race because you have seen both of these candidates in power, and you have to ask yourself truthfully here. Do you think the U.S.'s economic condition was better under Kamala or Trump? Now, let's be honest here. Joe Biden's not calling all the shots there. He's taking his midday naps. We have to respect that, though. You look at both presidencies and you got to make the best decision for yourself. Ask yourself, did you like your economic condition better in 2016 to 2020, or did you like it the better last 4 years? Be honest with yourself, and I think you'd make your decision if that's your most important issue off that. Obviously, insert your personal beliefs. Do you think which president is going to send us into World War III? Obviously, that would probably impact the stock market. So those are my thoughts on it. I'm also going to be talking a lot about it on tonight's show. As I mentioned, 9:30 p.m. Eastern, Cash Flow Kings. Be there. Alright, thank you all for watching. Smash the like button, subscribe, do Dividend, Stocks, Not Drugs, and have a good one.